We're talking about the New World Order, and here to explain, James Demmert, founder and chief investment officer, Main Street Research, is here with me to talk about some of the global exposure that he is favoring at this point. What does this mean, the New World Order?
Thanks, Nicole. Good to see you again. And it is a new world order. And I always say markets really respond to government policy. And we have a new world order and government policy here in the United States, and that's forcing big changes overseas. And we think that's what's driving the difference between performance of stocks in the US, which have done nicely this year, but foreign markets have done way better. And so we think a lot of that's based on this new world order of policy.
So Europe is always the one that people always say, oh, I was investing in Europe, it's done so well, I'm going to continue to invest there. Is that sort of what you're thinking for Europe in particular?
I think Europe particularly, but I think if you look carefully, we can talk about this, it's sectors in Japan or India. A lot of foreign markets have been neglected for a long time as US markets have been deemed exceptional. And I think that's about to change.
So these areas, Japan, India, Europe, you would still have money invested there because you still think that the way it's lined up and policy is not really changing here. So they're going to continue to benefit because they're changing some things that they're doing?
Yeah, and I think that's a great point. These policies are not going to be changed in a hurry. In fact, we think they're multi-year. And what's really interesting is even though stocks overseas have gone up more than the US, they're still fundamentally very inexpensive relative to U.S. equities.
But you do think we still have room to run here. I saw your year-end price target was 6,800, right?
Yeah, 6,800. I think that seemed far away when we were at 5,000 just a couple months ago. But now we're in striking distance, and we think we can get there because in the United States, you have this sort of not too fast, not too slow economy, what we call Goldilocks, which is a great setup for certain equities, particularly for technology, which will probably lead us to that 6,800 level.
So let's talk about some of the catalysts that will drive U.S. growth. I mean, what do you think will work for investors?
Yeah, I think investors, really importantly, should be careful here. You've got an economy that is running not too hot, not too cold, but we're going to be very sector specific and try to avoid the tariffs if we can. So in this kind of environment, technology tends to do quite well with rates not moving upward and economic growth somewhat resilient. What I think is really interesting, and we're seeing it this week with earnings, is that the financials, there's a big bull market in the United States in financial stocks, and that's really, they're discounting all that deregulation that's coming their way. So in the United States, we'd be very specifically overweighting tech. In fact, US really owns the AI space, if you will, globally, and in the financial stocks.
I do want to talk about some of the names that you have highlighted here, but our last guest from BlackRock was talking about iBit, and they were saying that they recommend 1 to 2% of your portfolio with some exposure to Bitcoin. Are you hearing more and more of that? Do you think that sounds pretty good or not necessarily?
We would agree with that theory. It is becoming a more institutional phenomena. Institutions want to own it, and we would suggest that the 1 or 2% allocation is probably enough.
That's probably good. So when we talk about some of these names for energy, you had GE Vernova, which had a nice move today.
It sure did.
GE Aerospace and GE Vernova. GE Aerospace went to a 25-year high, pulled back, but people are profit taking too. Tell me about some of the names that you have picked here. You have Palantir in technology, Nvidia, and energy, GE Vernova, and some others. Tell me some of the names here.
Yeah, GE Vernova, Palantir, Nvidia. In the United States, if we're just going to focus on that, all share one thing in common. We are in the early stages of a very real AI tech revolution. We need more AI chips, where Nvidia comes in. Companies like Palantir are using those chips to build these robust platforms. So we want to make sure we're going in that direction. And let's all face it, there's not enough energy to drive all this AI, the EVs, and the crypto. So we need companies like GE Vernova to help us build the grid.
Yeah, you did abroad. You had Checkpoint, that's Israel-based, right, for technology. You are still looking abroad. I see a few names that you have here that are based abroad.
Yeah, there are technology companies that are attractive overseas, not quite as much of an AI bent, but companies like ASML in the Netherlands, SAP based in Germany, There's a whole raft of companies that are related to AI there, and we think, again, the price earnings multiples overseas are significantly less than what you're seeing in the US, so there's a valuation very compelling.
When you look at the geopolitics of what's going on here, do you have big worries? Do you have sort of base case of, for investors who call you and say, look, I'm worried about what's going on in Israel and Gaza and Palestine. I'm worried about Iran, Ukraine and Russia, blah, blah, blah. I mean, what do you tell them?
I've spent half my career worrying, and I'm still a 50-50 worrier today. And I think that's because there is a lot going on. It's a complex world. Those Mideast tensions, if they were to extrapolate, that can tend to disrupt the business cycle, which is the big risk for stock investors. So you want to keep an eye on that. We use stop losses as a way to mitigate downside. Another thing that I think is important is our fiscal spending here in the United States. It has been out of control for a long time.
Right.
And,
decades.
Yeah, and if we get our U.S. debt gets downgraded, we think that would create a very significant decline in stocks. So we want to keep an eye on those, use risk management tools.
Right, understood. I mean, there's still worries about the dollar, whether or not the dollar stays as the reserve currency, if it really gets devalued to help with our debt somehow, and then people move more to crypto. I've been hearing a lot of theories. Did you hear that theory?
Yeah, and
does that have merit?
I think part of the reason people are going to gold, going to crypto, is this feeling, and they're not wrong, the US dollar has declined quite a bit. There's a bit of mistrust now about US policy when it comes to foreign investors, and I think that's driving some of those changes that you're seeing in the value of the US dollar, making it much more expensive for us to go overseas and have a vacation.
Let's talk about earnings. I mean, we have Netflix later today. Did you have a Netflix thought?
We do. We're big owners of Netflix, have been for a long time. Our feeling is they're going to meet or beat expectations. I mean, that business, they have a moat around it. They have a tremendous market share. That is still growing. And they started having this pay for advertising or pay to play, which has been very accretive to earnings. So we think those numbers are going to be good.
Okay. James E. Demmert, founder, chief investment officer at Main Street Research. Great to see you, James. Thank you so much for being with us today.